What's up, guys? Welcome back. How was your weekend? It was a good one. Today, SPY sold off pretty good, really. We're down, I think, 2 points or so, 2.5 points. Or percentage, rather, I'm sorry. Yeah, points. I wanted to share the way I sometimes play certain stocks if they are running up aggressively. There's lots of different ways to profit on something if it runs up aggressively, and if you're in on it early. Take this AMC, for example. They're opening back up in New York, I believe, and just some bullish news over the weekend, and pre-market was up 6.5%. I didn't get on it real early, but I'll show you what you can do even if you get into it late. It was right about here. I just looked at the charts and saw, okay, this is... I think this will keep going, and I wanted to pick a very safe play. The most risky play on that, I don't know, sell a put, $4 strike. But no, there's other plays that are risky. Buying just a bunch of calls, way out the money. There's buying calls in the money. Those can gain value. You know, if you bought calls here, then yeah, they probably would have gained value till about here and then started losing value. You also could have just bought shares since this stock is so cheap. If the stock's cheap enough, sometimes I will do this strategy. You can just buy shares and then sell them out right here. Just do a little day trade, you know, confirmation, thanks trader, validation, sell them. That works. I'm not gonna get huge gains unless you put in a huge amount. You know, you put in 5 grand and maybe the stock runs up another 5%. Great, cash out, whatever. What is that, $100? I don't know. Another way to do it though, and the way I did it today on AMC, which I'll show you, I actually did on a few of them today. Just kind of felt like doing it. It was weird. Since I don't want to put a whole bunch of money in shares, because that takes capital and that's somewhat of a risk in case it's just a big pump fake, which this kind of looks like, but it kind of looks like a bull flag also. I mean, this was a pretty low down here, $2.6. If you look on the daily, it was way oversold. So, you know, I'm pretty comfortable at AMC in these levels as long as there's no bankrupt. Same thing with CNK, and it could go bankrupt, I don't know. But CNK did kind of the similar thing. That's Cinemark. But what I do is I bought 100 shares. So 100 shares of AMC. It's easier on AMC because it's cheaper than CNK. But I bought 100 shares right here. So, I don't know, $350. And then I sold a call. And what happens when these stocks shoot up with all this velocity, this momentum, this speed, this steam, the call options get expensive. That's why sometimes if you are trying to chase this, buying call options, say you don't get into it till here, at this point, those call options are so expensive and they're very unlikely to hit. But there's so much momentum, people think they are. So if I sometimes see crazy run up, I will just buy 100 shares if it's cheap enough, and then I'll sell those call options that are very expensive. You can do credit spreads with this also. Credit spreads are more risky. If you own 100 shares and you just sell one call option, it's not that risky. And I'll show you how it worked on here. Let's see, did I do it on this account? No, I didn't do it on this account. Which account did I do it on? Well, I did it with another one also. I did it with Hertz today. So Hertz, it had a run up last Friday, right? It had this crazy run up on bankruptcy, or loan for bankruptcy, whatever. And I set up a bull flag here. It's like interesting. And then today, kind of pump faked. It was running up, you know, extended hours, market was closed. It did this jump, came down, and then right here, I actually bought in right here. Bought 100 shares, and I was kind of waiting for it to pass this this high, and then it would keep going, but it didn't. But around here, I sold a call on Hertz. About 100 shares of this, which was 200 and something bucks. Let's look at it. $267 I spent on 100 shares, and yeah, on the overall shares, I'm down $34. Not a huge problem, because even if this goes to zero, it's $266. Not a huge loss. But of the $267 I spent on it, when it was shooting up, I sold a call. Here it is. Boom. So what happens sometimes, you know, you do this trick and say you sold your call here, and then Hertz just went crazy and kept going, and you sold your call at the strike price of 350, and Hertz was like, okay, 350 today, and then tomorrow $4, and the next day $5, and you know your expiration is on Friday, and by Friday the thing's up to $10 or $15, and you sold a call right here. So that'd be kind of crappy. But what does it do? It's so safe. It locks in profits. No matter what. I mean, if it goes up, you're gonna lock in profits wherever your strike price is. So if it keeps going crazy, you're gonna be like, yeah, you missed out on some gains. Of course, you could buy more shares if you wanted, or buy calls at that point. But if it doesn't, and it just kind of goes up a little bit, but there's a lot of premium, then you can sell a call, and that's what I did here. I sold a call expiring Friday, and I gave myself actually a lot of room on this. I didn't need to, but knowing Hertz and how crazy it's been, I was like, all right, I want to give it at least some room to grow in case it does get to 3.5 by Friday, $3.5. So I mean, that's pretty significant. It could go way higher, but if it gets to $3.5, that'll be good gains on the shares, and then I'll also collect this premium. I'll keep this premium either way. So I made $23 selling that, and then Hertz kind of pump faked and sold off. So this gained value, this call that I sold, because it's less likely to happen. So I could buy this back tomorrow for the difference, or I'll just wait for it to expire. But yeah, that's kind of what I do. Of course, on the Hertz shares, we've lost on the Hertz shares, but that's no problem. We'll let this sit and simmer, and then I also did it on AMC on this account. So this one, I don't like how AMC is really laid out, but anyways, we bought these cost basis 348. So this one actually worked better. I think my timing on it, 348. So yeah, right about 348 right here. We bought 100 shares, 348. I was like, I don't want to buy calls on it. I don't want to do credit spread in case it does something crazy. I'm going to play it safe, buy 100 shares, and I'm not trying to day trade it. It's kind of like a swing trade. Because AMC, I mean, it's been kind of at a bottom here, it looks like. If you look on the daily chart, it's way oversold here. So vaccine news and that kind of stuff, like that makes it run up. So I bought 100 shares right here, and then I sold a call, and there's pretty good premium on this as well. Let's see if we can analyze this. So it's not great. Max profit's $14, but I gave myself a bunch of room on this one. I probably could have had it come down some more. So this is October 23rd. This is Friday, a $4 call. Not a bunch of room, actually, just a little bit of room. But look, if this kept running up to $4, then I would have won on the shares and won on the covered call. So it didn't. It kind of sold back off, and might be a bull flag. It might keep running up tomorrow. But either way, I'm going to keep that little premium, which is $14. And then I'm still actually even up on the shares. I'm up $5 in the shares. So tomorrow, if it's flat, I could sell this call back and make a little bit, or just hold it till expiration, see what happens, and kind of do the wheel on it then, or however. But that's kind of how I mess with cheaper stocks that are running up quickly. Sometimes you could just buy shares of it and sell them out when you think it's topped. But what I like to do is, on cheap ones, is buy 100 shares and sell a covered call on it. Like I said, sometimes it bums you out because you missed out gains after your strike price, or if you time it too early, which I've done before, say on Hertz. So let's say right here is when you bought your 100 shares. You bottom ticked it perfect, and then right here you sold a covered call. But then as this went up the rest of the day, that covered call got more and more value, which to you is bad if you sold it, because then that means you've lost value on it. When if you sold it when it was up here, you could have collected a lot more premium. So with selling the call, you kind of want to try and find the top for when you sell it. So if you bottom ticked it perfect, bought 100 shares here, like this thing's gonna run crazy, and you just so happen to sell the covered call here, or even the next day here, that would have been the best way to do it, especially if it starts selling off then, because then you have a low average price on it, and then you sold the covered call when it was had the most premium. Yeah, that's kind of my little tip for today. I did that with a couple. Let's see, I did C and K also here. So average cost in here is 876. So I had that one kind of late. That was kind of the top on it, which is not really what you want, but I sold a call in C and K. And this one I actually didn't really realize it. It all happened pretty quick this morning, but this doesn't expire till November 20th. So this wasn't a great play. It's only $21 in credit. Not a whole lot of premium on these. That's just the way it works. It's not much implied volatility or, so it's just, yeah. But I'll probably, I don't know, I might be just doing the wheel on this one too. And once it comes up, selling it, or once this expires, sell another covered call when it jumps up a bunch. But since these are cheaper, actually this one isn't. Okay, the CNK wasn't a great play for me. But it's the same strategy and you kind of can understand. This one costs a little bit more, 876. So, but it's fun. It's fun to sell covered calls. It's nice, guaranteed profit, really. It's just capping your profits. If stock price goes down, then yeah, you profit on the covered call. You lose on the shares, but you're gonna profit either way, because if the stock price goes up, then you make the profits there. So anyways, that's my little tip for today. This is kind of, I guess, a tip video, but I'll do a little recap. Today sold off for us, pretty heavy into Rocket and Tesla, and those didn't do very well today. This Hertz play I did also on Hertz, that kind of hurt us. T sold off. I opened up a credit spread on T, saying that it won't close below $26. It's pretty aggressive. $26 on Friday. I did that because I see AT&T and I look at the daily chart, and the lowest it was during COVID was 26.08. I'm kind of banking that it won't go below that. It could, but we'll see. This is so oversold in the daily chart. The RSI is at 21 on there. The hourly, it's way oversold. So hopefully it's kind of found a bottom here. I could be wrong. There's not really news on this, why it sold off so much, but yeah, open that one up. And then NIO, I opened up call credit spread. So the AT&T one's bullish. It's my only bullish one. I opened up this one, which is bearish on NIO. To me, it looked like it's been overbought on the daily. Red candles on the hourly, overbought. Kind of see this trending, starting to flatten out and go down. MACD's crossed over the signal. It's going down. Red candles below the 9 moving average. I picked up 3 call credit spreads. So if it expires below $30 on Friday, we will keep that. We'll keep that $69 premium. And then I did it on Peloton too. Peloton's kind of jumping around though. They're all over the place. I've lost money on Peloton, thinking that they were at a top 2 weeks before they were. So we'll see. I had this rally right here in the middle of the day, and that was scary, but hopefully it stays below. My strike on this is 137, so I stay below 137. I might close out of this early. I'd like it to come down some more though. I'm pretty heavy into this one. I've got 8 of them. So $264 premium we will keep if this stays below 137 by Friday. That's it for the long term. Webull, haven't done much. There's news on Intel that I jumped on, made it free. I have DraftKings shares, Winnebago shares. This account, this E-Trade account, since it's below the amount I need for spreads, I'm gonna do just shares on here and then sell cash secured puts and sell covered calls until I get it back up to the amount where I can do spreads. I don't want to deposit more money into here, so that's my plan. That's what I'm gonna do. Hope you guys had a good Monday. Remember to sub up, like up, comment down, make your money happy money, so it'll stick around, and let me know how you did today in the stock market. Okay, peace out.